Oh yeah. Hey Alex, whenever you're ready, we're gonna start.
Great. Hey, everyone. Sorry, I'm in an airport, so my apologies. I might have to go off video a time or two or mute when they start coming over the intercom. But really happy to be here and meet everyone and talk about crypto and what it's like to work in the industry and research this incredible, exciting, and burgeoning ecosystem.
Yeah, exactly. So if you guys don't know, we've got Alex Thorn, who's head of research at Galaxy Digital, and Galaxy Digital is kind of like one of the premier crypto funds in the space. It's I think founded by Mike Novogratz, who, if you guys don't know, who's a pretty big figure in the crypto space. So we'll kind of let Alex take it away in terms of just his background and a little bit about Galaxy.
Yeah. Absolutely. So let me introduce myself first, and then we can talk about what Galaxy does before we dive into some of the other interesting topics. But I am the head of research at Galaxy Digital. I'm going to call ourselves a multi-pronged financial services firm based in New York. And I'll talk about what we do in a minute. But I joined Galaxy in February of this year after spending 12 years, my whole career at Fidelity Investments, mostly in Boston. I lived in Medford, Somerville, and Cambridge during that time. And so I know the area well. And at Fidelity, I did a bunch of stuff. I started at the ground floor as a paralegal in the legal department when I graduated from Vanderbilt in 2009, right at the height of the financial crisis. So actually kind of similar sort of experience, I'm assuming, that some graduates are having now, entering an economy that's been reshuffled due to sort of a crisis. Different, same but different. And I worked in legal and technical investigations at Fidelity for 6 years. I eventually was Fidelity's top forensic investigator. So that's computer investigations. And then in 2012, I sort of discovered Bitcoin mostly as an internet money. And I'm sort of, again, if the technical investigation background, as it implies, sort of a tech geek and really sort of an internet hacker. I studied political science and economics, though. And when I discovered Bitcoin, it was because it was really interesting. During the Euromaidan protests in the Ukraine, there were activists who were looking to raise funds to support their efforts. And there weren't ways to send them money. And there were activists holding up QR codes asking for Bitcoin. And that's how I discovered it. It wasn't until several years later when Abigail Johnson, who's the CEO and chairman of Fidelity, she became interested in Bitcoin and directed some folks at the firm to look into it. And they reached out around the company and said, who knows about this thing? And I was discovered there as someone who knew a lot about it. And that's when I sort of maneuvered my way to work full-time on Bitcoin at Fidelity. And I was the director of blockchain research there. I later co-ran Avon Ventures, which is an early stage venture fund that invests capital that belongs to the owners of Fidelity in early stage crypto companies from 2018 until the beginning of 2021. And we made investments in companies like BlockFi and Casa, Falcon X, and a range of others in the space. So I joined Galaxy in February because it was a really interesting opportunity to work at a company that is fully devoted to this ecosystem and to build out and lead a team to produce research content for both internal and external audiences. And that was a really fun opportunity. And so I've been absolutely delighted to be at Galaxy. It feels like ground zero when you're working on crypto. When market moves happen, it feels like you're on the New York Stock Exchange in the 1980s, the heyday of sort of markets and sort of the center of the crypto world. And we have a lot of smart people at Galaxy that come, a lot of them from traditional finance, but also from technology, and a lot of young people right out of school that just really contribute a lot and have really unique perspectives. And that's sort of my background. And I know we'll talk more about crypto research, but just more background on Galaxy. So we're Mike Novogratz is a sort of a Wall Street titan who was at Goldman for a long time and later at Fortress. a pretty famous investor in New York in general, and he became interested in Bitcoin and Ethereum, at this point many years ago. And in 2017, he was sort of trading these things and investing from his family office, and then sort of decided, this is much bigger than just something I should be investing in. We should build out a real company to do this. And that is what became Galaxy in 2017 and 18. We have 5 major business units. So the first one is pretty well known. It's our trading business. We trade crypto assets on behalf of clients in a number of ways electronically. You can call us up on the phone and trade with us over the counter, it's called. And we service a lot of major crypto funds, traditional investors, hedge funds, high net worth individuals, pensions, endowments, and give them access to this asset class through that trading offering. And that's sort of where I sit the closest. When I say it feels like when the market moves, you're standing on the New York Stock Exchange floor, it's really because we're sort of in the middle of this big trading operation. But we also have several other business units that are very interesting and growing really fast. Another is our asset management business. So if you're familiar with the Grayscale Bitcoin Investment Trust, GBTC, we also run funds like that that give institutional investors access to this asset class. Why would you own a fund that holds Bitcoin rather than just buying Bitcoin directly? There are a lot of institutions that are unable to actually own digital assets for regulatory or structural reasons. Also, it's simpler for many institutions. We still don't yet in this industry have a way for a pension, for example, that has all their accounts, say at Fidelity, to have their Bitcoin, physical Bitcoin, quote unquote, sit next to their other investments in their accounts. But you can hold private funds, and so that asset management business has a bunch of stuff. They have single asset funds like the Galaxy Bitcoin Fund, the Galaxy Ethereum Fund, the Galaxy whatever fund that they just hold those assets. They also have indexes. So we partnered with Bloomberg a long time ago. I think it was the first major index in the space, the Bloomberg Galaxy Crypto Index, that holds a basket of top 10 cryptos and gives you sort of broader access to the market. They just launched a DeFi fund that similarly has a basket of crypto assets that give you exposure to decentralized finance. Other business units, we have an investment banking team that advises companies in the space on mergers and acquisitions and also going public. A sort of a traditional investment bank business inside of a crypto company. So they obviously focus on companies operating in the crypto ecosystem. And we also have a big Bitcoin mining business that mines Bitcoin on a proprietary basis. So Galaxy mines Bitcoin. They also advise and provide financial services to Bitcoin miners. What did I say? Trading. And then we have a big investment team that does what we call principal investing. Think of it like a venture fund inside Galaxy. So they invest in early stage protocols, whether those could be DeFi protocols or they could be actual sort of equity-based regular companies, startups. And they do a lot of work in the space as well. So think of it like trading, asset management, investment banking, mining, and principal investing. That is what Galaxy does today. And we primarily serve institutional clients. So, unlike Coinbase, you can't come to Galaxy and as sort of a retail investor and open an account. Instead, we work directly with sort of high net worth and funds in the space. And then one other thing I'll mention is that we recently acquired BitGo, which is a major crypto asset custodian, I think the second largest behind Coinbase by assets under custody. They provide wallet infrastructure and custody to businesses around the crypto ecosystem, including many exchanges. So many exchanges are actually powered by BitGo custody and wallet infrastructure. And so together, BitGo and Galaxy offers a pretty comprehensive offering in the ecosystem. That's sort of the background. Let me pause there before we move on and see if there's any questions or if anybody on the phone. I see we got Olivia and I think Kareem is on the phone too from my team, and if anyone else wants to chime in.
Hi, everyone. My name is Olivia. Alex, thank you so much. That was very comprehensive and much better articulated than I would have. So thank you for taking the lead there. I lead our talent acquisition team here at Galaxy. And I think, Alex really covered all of it, but it's really nice to meet you. I'm happy to be here. If you have any questions, I'll put my email address in the chat. Feel free to reach out. We do have analyst and intern opportunities that we're currently recruiting for. So I can direct you to apply if you are interested. Kareem, feel free to jump in if you have anything to add as well.
Yeah, hey guys, I'm Kareem. I work on the research team with Alex. I graduated in 2019. Super fun place to work at Galaxy. Good vibes. Alex was very thorough, but I don't know what kind of format we're going for on this, but I'm happy to run through on anything, answer any questions.
Yeah, this is awesome. Thank you guys so much. I didn't realize that we'd have the whole squad here, so that's awesome. I love it. So yeah, I mean, honestly, I feel like Galaxy kind of is super interesting because you guys have these kind of 5 business sectors that really cover the entire crypto industry. So you kind of have a very holistic look of what's going on in the crypto space. Would love to just kind of hear from your guys' point of view, kind of what your role is, what it's like kind of working at Galaxy, and then just how does being at Galaxy kind of shape your perspective of crypto and I guess specific to your individual roles. Alex, you can kind of focus more on research, and Olivia, you can kind of focus more on I guess the HR side of things and hiring.
Yeah, absolutely. I mean, I think on the research team in particular, it's really interesting because we do a combination of sort of deep research, and I know just lately we've been doing this a lot. We sort of a combination of deep research and then in rapid response, because these are active markets. So for example, we put out a report this summer on what we called the layer 2 report, but it was called In Search of Scaling, a Guide to Layer 2. This was sort of a multi-month effort to comprehensively explain the different layer 2 scaling approaches that major blockchains, primarily Bitcoin and Ethereum, are taking to alleviate congestion on the main public chains. That's sort of a big 35-page deep dive into state channels and roll-ups and side chains and all of that. And it's sort of a longer term piece of collateral that can be used and sort of has some staying power. So we do a lot of sort of deep dive stuff like that, but we also react sort of quickly. And there's 2 reasons why primarily. One is we have clients who are actively trading these markets and are looking for insights on an ongoing and rapid basis. So one example of that is today, the US Treasury Department released this report on stablecoins from this group called the Presidential Working Group, which was established by the Biden administration to sort of provide a comprehensive overview for how the government should be thinking about regulating stablecoins. That came out at 3 p.m. We're already working on a report to release to our clients tomorrow morning to explain what we see there. And it's not just, there's a lot of commentary, you can go to the Block or CoinDesk, they're going to explain the gist of what the report says. But what our clients want to know is, we've been following the regulatory environment and these assets closely for, months, obviously. And they want to know, for example, did this report underwhelm or did it come in, hotter than expected? What's the market reaction likely to be? Are there any winners or losers in the market that we expect based on what the report says? Where can they look to see the reaction to the report in the markets, right? If anywhere. That's sort of that rapid response. That's one of them, is because market events, right? Things that happen in real time can affect the market and therefore affect our clients. The other thing we also spend time on is trying to find insights for Galaxy. So this is also often sort of a faster paced endeavor than the reports like that layer 2 report, the sort of longer term deep dive stuff that we work on. This means a couple things. One, Galaxy also trades these markets. So we're looking for trading insights ourselves, but also, how do we position our business in an ecosystem that's evolving so rapidly, and not just as it relates to regulation, although that's obviously top of mind for a lot of people and is moving very quickly, particularly in the United States, but also, winners and losers. How do we think about different public blockchains? What do we think, the future holds for, how this thing shakes out? Is there going to be 50 or 100 blockchains that hold value and move value in this world, or will it be more like 5 or 10? If which ones will those be? And we have sort of a combination of longer term theses, but they get impacted. We have to constantly revisit them as market events demand, and that obviously affects how Galaxy positions its business.
Yeah, that's really good. And then also just kind of like, I guess like riffing off of that a little bit, what kind of like mental models do you use or heuristics when it comes to like analyzing crypto, both Alex and Kareem and Olivia, feel free to jump in. But it's such a fast-paced market, things change all the time. And so like I feel like sometimes you have to kind of like have you try to like dumb things down a little bit to make it simple because there's just so much going on. But we'd love to kind of get your guys' what's kind of like, how do you dumb things down and make it easier to understand?
Yeah, I mean, like, let me put it this way. Like one thing we look at is, the relationship between Bitcoin and Ethereum and the rest of the market. And so, for example, somebody will ask me, they're like, I had this tweet that a friend posted that was like, oh, you work in crypto, name every coin. And I love that tweet because it's like people come to me and they're like, well, what do you think about, this new network, like, John Coin? Like, I heard they have like great technology. And obviously we can't evaluate like all of the 12,000 cryptos that are on CoinMarketCap in real time, right? And so we have to sort of segment out this market in a way that makes it possible for us to stay on top of, and that involves having a thesis about what's important and now and what we think will be important in the future. So one way that I think about this, and I'd love Kareem to chime in too. I mean, because again, we're not like a monolith. On the research team, we have a lot of different opinions, and that's okay. Our clients like to hear us, debate and sort of, argue about, what the state of play is. And so one thing that I've been thinking about a lot is that it's been really fascinating to see Bitcoin become so much more differentiated from these other protocols. The Bitcoin maximalists and the Ethereans love to chirp at each other about, whether one will overtake the other. The flippening, there was an article that I commented on in Business Insider about the flippening. And in reality, I think more this year than in any other time, the two have diverged significantly in a way that's great for both and great for the market. I mean, you have something that's as sort of battle tested and unchanging as Bitcoin. Its value proposition, both in the macro environment when compared to other assets like stocks and bonds and currencies, has never been more differentiated and clear, but also as it relates to other protocols. And Ethereum is the same way. You've got Ethereum rapidly innovating, a giant, sort of waves of application development happening there. But, it can never really challenge Bitcoin's monetary. Bitcoin is a sound money monetary network. But on the other hand, the Bitcoin community doesn't want those things on its chain, right? And so you've got this real nice, clear sort of, differentiation that allows you to make different bets and express your view on the future of this market more finely. And what's been interesting to see is when you go beyond Ethereum, these other protocols like Avalanche and Solana and Luna and Phantom and whatever else, like they didn't really exist, even 6 months ago in any sort of real usable form, but they do now. And their ecosystems are growing notably so that, for example, when you had, the NFT craze in August and September really congest Ethereum, I mean, to levels never seen before on Ethereum. We're talking, $200 to $600 sometimes to and gas fees to perform a simple DeFi transaction or place a bid and buy an NFT. In the past, there was nowhere for that demand to go. Even like 2017 with CryptoKitties was often cited as bringing Ethereum to a crawl. The reality is that what we saw in August and September just dwarfed that by orders of magnitude. But there was now, Solana to go to. It had a DeFi ecosystem, albeit smaller than Ethereum's. It had NFTs that you could issue in NFT marketplaces. So it's a really interesting kind of evolution of the space where you've now got Bitcoin as this sort of canonical hard money ledger. You've got Ethereum as sort of the standard bearer for tokenized assets and DeFi, but you have these other options and you can bridge to them from Ethereum. So we're sort of like just from a mental model, that's how I think about it. I don't really consider sort of altcoins as challenging Bitcoin. To the extent that they do challenge Ethereum, I mean, that's sort of something we're always looking at, but we're always focused on adoption metrics. You know, we're never gonna, you know, like I said with that John coin example, I'm never gonna say, oh man, this tech is so good, it's gonna challenge Ethereum. Like, we'll wait and see. You know, we want to see some actual usage there. Both of these have really sticky network effects, and so you can dismiss until you see some real growth in community and adoption. I think that's something you just have to do, given the giant breadth of this industry. But let me just stop there. It's a lot. I'll let Kareem chime in too.
Yeah, I kind of like, I'd echo that a little. Just you're never going to be able to keep up with everything, and so I think one of the ideal plays is to just like kind of like narrow your scope until you are keeping up with most things within that scope, and addressing like a universe that you think is like meaningful and actually like impactful. I mostly work on like Bitcoin mining related stuff. I cover a lot of other things as well, and I think that's been one of the cool things at Galaxy is like between our research team of about 6, we do tend to have like most of the industry covered, just because like Alex said, it's not monolithic. We find different things interesting, and we like regularly argue about them. But yeah, my 2 cents is redefine what it means to keep up with things, and then try your best to do that.
Yeah, you need a thesis on the space in order to make that narrow definition work for you. It's really important.
Yeah, definitely. That makes a ton of sense. And kind of like on a similar note, like I feel like crypto research. I mean, I used to work at Wellington. It's sort of like your more traditional like TradFi shop. Like I guess like traditional research where you're talking about like cash flows and DCF models. It's so much different from crypto research, which is more about network effects and kind of like almost like investing in startups. And so from like a research perspective, like maybe Alex, I know that you used to work with Fidelity, and would love to just kind of get your guys' take on like what is kind of like the leap of faith that you need to make to kind of like get into crypto research almost, and like what are some of the metrics that you guys kind of like focus on?
Yeah, I mean, one of the first things you have to do is just accept the market. You just have to believe the market isn't fake, right? I mean, when I see, a lot of older economists on Twitter and stuff just constantly, berating crypto and basically being wrong, like you just have to ask yourself, like, are they not seeing the market? I mean, the market just disagrees with them, right? On their value. You can perform, DCF analyses and look at protocol revenues now more than ever, which is super interesting, DeFi in particular. But you have to realize that people, even if something seems stupid to you, Kareem and I wrote this report on Dogecoin back in May. We called it the most honest shit coin, and it is dumb, and it was dumb. It was always dumb, but tons of people love it, and you just can't deny that communities build around these things that makes them valuable. Novogratz always gets crap on Twitter because he hates on Cardano. I think for good reason, but there's a lot of people who buy that thing, and you just have to take that into account. To your point about network effects, that's a major piece of this story. You've never had digital online monies that communities can rally around, populist communities rallying behind a technology, right? It's kind of a new phenomenon, and so you really have to open your mind to that, especially if you're coming from a traditional financial research job. You have to sort of look at it a little differently. It doesn't mean that those skills aren't valuable. They absolutely are. You just have to sort of realize that this is kind of an unprecedented situation, and there's sort of more to it than that, right? I mean, I don't want to liken it too much to GameStop and AMC trading, but there is a community-based aspect to this, right? Where I try to explain to institutional investors about Bitcoin, they're like, oh, why should it be valuable, blah, blah, blah. And I'm like, first of all, the market says it's valuable, and more people every single day are raising that floor of that price. They're buying it. For them, it's a movement, right? And that is something that I think the traditional world still has a really hard time understanding. People don't just think this thing is going to work. They're working actively to make sure that it does.
Yeah, that's awesome. That makes a lot of sense. I think we have a couple of questions in the chat. One kind of regarding NFTs and the fair value of NFTs. You guys have any thoughts on kind of like the NFT market, you know, where that's going, how to kind of like value, you know, an NFT?
Yeah, I was joking when NFT like boom really started to take off in August. Like, I was like, this is awful. Like, we all got into the space. Like, you know, we're like all sort of like currency, a lot of commodity traders, you know, foreign FX traders. I was like, now we have to learn about art. Like, this is outrageous. Like, but the reality is, like, you know, a lot of what's been interesting in the NFT space has been this community building. Again, like, there is sort of a couple different things we see there. There are things, you know, PFP communities like CryptoPunks or Bored Apes and stuff. It is really sort of a community status symbol. But then you also have actual genuine, you know, art trying to be, you know, beautiful. I mean, a Fidenza, I think, and art stuff that comes out of art blocks is really interesting. So, you know, on the one hand, like there's those are both interesting use cases today that NFTs are being used for. We see brands using them, which will get interesting. Basically, every sports league in the world is doing something with NFTs. At its base level, I mean, as a replacement for trading cards, that definitely seems to be something that the world is going to accept and is starting to accept. But I think longer term, if you have, you know, this also serves as sort of a proof of concept for the non-fungible token idea in general, right? I mean, if Bitcoin pioneered digital scarcity in general and sort of did it in a fungible way, creating scarce money, then think about the things in your life that are not fungible, right? Contracts, relationships, real estate, other types of property, intellectual property. I think as some of the infrastructure gets built out to support these digital collectibles, you'll start to realize, and the market will start to realize sort of how broad the use is for tokenizing value in a non-fungible way. And we'll see a lot more use for that. And you know, a lot of things start as a game. The internet, like some of the biggest use cases for the internet in the beginning were games, right? And silly things, right? And you started to see their adoption sort of open the door to things like e-commerce. And I think it'll be similar for NFTs.
Yeah, I 100% agree. We have 2 questions.
Yeah. Can you guys hear me?
Can you hear him, Alex?
Yeah, we can hear you.
Awesome. Thanks so much for taking my question. We've talked a lot about kind of layer 1 and Bitcoin and Ethereum, but it seems like a lot of the value unlock comes with layer 2 applications that can kind of, you know, disintermediate, you know, I guess inefficient kind of industries with like an untrusted middleman or one who takes too much economics. So I guess in terms of layer 2 applications, what sort of catalyst will drive adoption? And if you think there will be any initial killer apps, what spaces do you think we'll see those in?
Yeah,
I
mean,
have a hot take on this one.
go ahead, Greg.
Yeah, I'll use layer 2 because I think like when we kind of say that, we tend to mean stuff that's like on a not on like a main chain, but I'm just going to talk about it like more broadly as like stuff that's stored on one application, like application level things. But yeah, I think actually first thing that crypto disrupted, a lot of the crypto market looks and acts a lot like gambling, and the first thing that crypto disrupted was like actual centralized exchanges as the centers for gambling. So it's like if you look at Uniswap today, it's really cool because it was a successful attempt at like disintermediating the first thing in the crypto market that had product market fit. And I think that's really, really exciting. And I don't think it starts and ends with that. I think there's going to be a lot of other stuff. I have come around on DeFi as being like something that, you know, there is like quite a bit of genuine innovation there. But to me, that's like really cool that they kind of in a censorship resistant way created these like anyone can launch anything financial markets.
Yeah, I like that. And I think I think that's a really good point. We're sort of iterating on ourselves in this space, right? Because it moves so quickly. Another thing to point out when people ask about sort of future use cases, and you know, when I really started working on this heavily, we did like 50 or 60 proofs of concept at Fidelity for blockchain, right? Using blockchain to do other stuff. People said, oh, can we do like supply chain? Can we put financial reporting on a blockchain? What can we put on a blockchain, right? People were like, yo, look at this thing, let's slap a blockchain on it, right?
Alex, I think you're cutting out a little bit. Is it us? Or is it us?
Alex, I think we lost you.
Yeah, I think it's, yeah. Kareem, are you fat protocol thesis?
Um,
By that, or are you, application layer?
I do pretty much all my accounting in Bitcoin. I think that for me, that's kind of where like the core value is going to be. I think it's going to, in the long run, be where a lot of the accrual ends up. Sure, there's other stuff that's going to take off as well, and like I said, I'm like in the medium term pretty bullish on a lot of these things, but yeah, I think most value is going to end up occurring to like Bitcoin in this space.
Sorry about that. Can you guys hear me now? Oh, what's going on with these AirPods? I was just going to throw out, we did a lot of POCs at Fidelity. I think you probably heard the beginning of that part, it looked like, but most of these failed because the switching costs were too high. Connecting disparate parties was difficult. It wasn't any easier because there was a blockchain. In many cases, they still wanted to permission everything. So a centralized intermediary would have been fine. You didn't need a blockchain. I still think there's going to be other use cases. I would love to see more financial use case of blockchain in the traditional markets. I still hold out hope that we'll see securities issued on the blockchain widely. That hasn't happened yet, but if you look at securities markets and stock issuance, it's a highly centralized model that wishes it was decentralized, and there's still a big use case there. In terms of Web3 and owning your own data stuff, I know a lot of people love this idea. I would love to see this as well. I'm still not convinced that you're going to see a major uptake, partly because companies like Facebook with their new initiatives are so powerful and have so many resources to make this thing work in a centralized way that I'd love to see that happen, but we don't really see a lot of demand in the market for it. I will say one thing that I've been really heartened to see is something like MetaMask. So easy to use, a single sign-on on the web with no accounts and no personal information. The widespread adoption and understanding of cryptographic primitives through things like MetaMask and Bitcoin wallets and hardware wallets is a game changer from a consumer UX perspective. That could yield a lot of benefits still in other uses, but I think it remains to be seen. For now, most of the use cases for blockchain are financial and crypto.
Yeah, and like blockchain and cryptocurrencies aside, it is absolutely bonkers that we share our credit card numbers with everybody we interact with. Like that's just a huge, like the whole system basically relies on people not feeling like doing fraud that day. And I think like if we were to move to something that is based more on like public key cryptography, where you have a signature with a timestamp on it, much harder to replicate. That could be potentially very, very good.
Yeah, definitely. It feels like crypto is very like behavioral changing kind of like technology.
Yeah,
Yeah, go ahead.
Thanks for taking the time today. Maybe this is a question geared more for Alex, but you guys deal with traditional institutions and they're obviously pretty far removed from the crypto and DeFi space. So, how do you think through your conversations, traditional capital allocators really view this asset class, and what do you tell them to sort of help navigate them through the ecosystem?
Yeah, I mean, just like to be clear, like they're all looking at it. They're not that as far removed as people think. I mean, even the largest allocators on earth, major state employee pensions, are looking deeply at this. They have people working on it. And they're actually much more sophisticated than we think. Than you tend to think about the space. They're becoming more sophisticated. Basically, there's a bifurcation in the allocator space where if you aren't actually looking at it, you're clearly not looking at it, right? There's no like, oh, we're poking around and we'll see. Like, there are major ones actively looking at it, and the ones that aren't are really kind of outliers at this point. they are looking at Bitcoin as sort of digital gold primarily. And I frankly, I spend time arguing that I think that's too limiting a view. But, you know, it has performed in many cases sort of as in line with inflation expectations in a way that sort of makes it look better than gold, while gold has floundered. And so that's interesting to a lot of them. They also just love the sort of tech story of DeFi and sort of Ethereum and its challengers disintermediating, you know, financial services in a way that generates protocol revenues. They do think about that, and they are watching it. And it's not a surprise. I mean, companies like Galaxy have put in a lot of effort to educate the market about the potential these things have. And they also can't help but look at the returns that people are seeing. One other thing I'll point out is they've almost all already been exposed in some way through their venture capital investments. So some of the biggest funds in the world, right, count those, you know, endowments and institutional allocators as their LPs, and have for many years at this point. So they all have some exposure. Most of them have some exposure, and honestly, like, I think we're going to see a lot more direct exposure in the coming months and quarters. It's just too hard to ignore. It's too global. It's too differentiated to, and especially in an environment, right, where interest rates are basically zero, real yields on bonds are negative, right? You have to go further out on the risk curve these days to generate the returns that your investors demand, and you know, crypto is sort of the forefront of that sort of risk asset.
Yeah, these guys also understand diversification, right? And crypto is yeah, people say uncorrelated, they're wrong. Less correlated with the rest of the market than most asset classes are. And so that's like, I mean, diversification is like the only free lunch in finance. They're not gonna ape in with like 100% of, you know, their capital on hand. But like they allocate like 1 or 2%. In the downside case, they lose 1%. In the upside case, they make a lot off of that trade. So that's kind of the I think the way that they view it. Like they're entering pretty cautiously, but it is very, very much happening, and they're basically all doing it.
Yeah, it's a really good point. And kind of like, I guess, you know, on that topic a little bit, do you think it's just because like the technology is more mature? Like why has it sort of like taken them this long to kind of get into the game? Yeah.
They can't really put money in like small asset classes. Like you won't find like institutional investors like really like, I guess like one example is like trading the art market, right? Like you won't find pensions like too heavily involved in that, because it's illiquid and it's small and yeah. So crypto, I mean, this market cycle we hit, it's now a $2 trillion asset class. And so like it's finally large enough to be interesting, and it's grown fast enough that they can't really ignore it.
Yeah, that's really cool actually. It's kind of like one of those things where it's like the bigger that crypto gets, it's almost like the safer of an investment it becomes. And like the more people are able to participate.
Yeah, it's not just the size, but that is a great point. I mean, they can't allocate. These funds are looking to allocate like, you know, hundreds of millions of dollars. Talk about the biggest allocators, right? There are state pensions with hundreds of billions under management. So a small investment from them is like $100 million. And you just simply couldn't allocate to this space until it was much bigger. But also there's significantly matured market infrastructure, right? So even in 2017, that entire run that took Bitcoin to, you know, 20K, there were no institutional custodians, there was no settlement, there was no prime brokerage, there was no, you know, algorithmic trading offerings, right? So all of that happened on the back purely of pretty unsophisticated retail exchanges. And today, the landscape is, you know, significantly matured in a way that, you know, makes it a lot easier for these institutional funds to participate.
We didn't even have like reference rates on the prices. That's why we like, until this market cycle, nobody agreed on what the actual like all-time high for Bitcoin was. No, we would fight amongst ourselves if we had actually crossed 20K or not. So like, it's one of those things where it's like, if you're trying to walk into a room full of boomers on this one, it's a really hard sell. But now that's changed. Like there's been like 4 years of people working on it in a pretty serious way and with pretty serious money behind it. So it's gotten easier, and it's gotten more interesting for them, I think.
Definitely. And so sort of like last couple of questions here before we open it up for Q&A is, when you kind of like look at the internet back in like the 2000s, like you couldn't have imagined like Google and Uber and Netflix. And so when you guys kind of like look at crypto, what are some of the big trends that you guys are kind of like paying attention to? And like, do you like, and then I guess sort of like, if you look into the future, like, do you think that crypto's value comes from it disrupting like traditional infrastructure, or do you think it's going to kind of like create its own market and generate like, like entirely new sort of like, new kind of like markets and things that we couldn't have even imagined?
Yeah, I mean, this is just my view. I think Bitcoin is going to be the next global reserve currency. I think like just the idea that we would continue to expose ourselves to like continual degradation of our assets for no real clear reason, and to the extent that the reason is clear, but with inflation, it's like pretty clearly not beneficial to the holder. So I actually like, I think this still kind of looks like an outside call, but to me, it's pretty clear as day that like people are going to choose to keep their money in, and states are going to start choosing to keep their money in a currency that can't be debased. On the other side of things, like Galaxy as a shop, we're pretty invested in like all of what I would say is a lot of like long tail use cases, and if any small handful of them work out, like there's a lot of upside there. I don't know what's going to be next, but I think it's pretty clear that like crypto is going to be a big thing in 10 years, and big on like a real big scale, not on the $2 trillion scale.
Yeah, do you have any projections for like total market cap of crypto in 10, 20 years? Don't want to put you on the spot, but we have to get some numbers for
Hey man, the dollar loses 99% of its value on a 100-year time scale. So calling at least 100x on that scale.
Yeah, I mean, I think now like the crypto markets are, a couple, maybe 0.1% of global wealth. I mean, I think it's totally reasonable to 10x or 20x like in 5 or 10 years. I don't think that's crazy at all.
Yeah, that makes a lot of sense. And so I guess like sort of moving more towards like, like working in the crypto space, like, do you guys have any general advice for, for students kind of like getting into the space? Like, what should they kind of like focus on? Like, what are you guys looking for when it comes to, like hiring interns or just kind of like hiring employees in general?
My advice is to, put in some money on an exchange and start trading a little. I think you'll learn a lot more than you think you will. And it doesn't actually take that much money to like get started and to actually like put your hands on it. Beyond that, just like using the stuff that you're talking about like matters, getting that practical experience. This is not an industry where like your educational credentials or really like anything you say or talk about matters. It's very much one where it's like, get on the ground, do stuff, you'll make it far. Like it's also just like very young generally. Like the entire like Bitcoin is 12 years old, 13 as of yesterday, and like that's pretty crazy, right? So you don't get people here who have like 50 years of experience of value that they've accrued. Like the oldest people have been here since like 2009. So it's pretty easy to carve out a niche for yourself and just like be the best at that. Or even just be competitive as like a generalist. I think there's a lot of room for that as well. And Alex, I don't know if he can chime in because he did just get on a plane, but
Yeah. No, I'm still boarding, but yeah, I mean, I think Kareem's absolutely right. Getting out there and using these things is essential for distinguishing yourself, and also just participate in the public discourse. I mean, it's very easy for me to look at two candidates who look, similar in terms of their credentials or even knowledge, but to see one that's, been writing some blogs, has a presence that I can point to and see, how they've been doing and what their thoughts are, is trying to engage with others in the space. That's a real differentiator. in general?
Yeah, I would say like my understanding of things kind of like went parabolic when I got on like Twitter and started like just following some smart people and seeing what they had to say. Before that, I was generally, I think I was just interested in things that the rest of the market wasn't interested in, and that I have, you know, later come around on were mostly distractions, which I think is just part of the learning process, right? You're going to look at like 50 things and like 40 of them are going to be a waste of time. But like you can kind of thin down the amount of time that you're wasting by focusing on problems that like people you think are smart are also tackling. So that's my advice. Get on Twitter, but also don't like post too much. It's all cringe, and you'll feel bad about it in like 10 years. So
exactly, you don't want to get roasted 5 years from now. Olivia, like, you know, from your perspective, like what are you kind of like looking at, you know, in terms of like hiring and stuff for Galaxy?
Sure. Yeah. I mean, literally every single business is hiring. It's pretty crazy. So I joined March 1st. Our business in terms of headcount, our company's doubled in size, actually more so than doubled, which is crazy. So it's been a really, really busy 8 months in a really nice way. I think, you know, we look for people who, it depends on the team, but, you know, people who, if they don't have professional crypto experience, meaning they haven't worked for another, you know, maybe a competitor of ours or a place like Fidelity that has, you know, crypto specific departments, someone who has demonstrated interest in the crypto space, whether that's research papers that they can show us, or maybe they have a Twitter presence, to Kareem's point, not too over the top, but someone who has, you know, just a way to show that they're actually interested besides just saying they're interested. And I think people who are curious, asking questions, who, you know, are just excited about our space and genuinely want to work in it. It's been really fantastic to be here and to work at a place where people are just so passionate and excited about what they're doing and actually want to talk about work, which is still new for me, and really exciting in a really, really nice, good way. But to answer your question, and I'm not sure who asked, because we're pinned, so it doesn't go to the speaker. But yeah, hopefully that's helpful. Again, we look for people who have experience or demonstrated interest in the crypto space. We're hiring across the board. Our interns are across the 5 main business lines that Alex had mentioned, plus research. So as a reminder, that's asset management, principal investments, trading, investment banking, and mining, and of course, research. Hopefully that's helpful.
Yeah,
I'm not too rambling on.
No, that's super helpful, and we'll have to
Great.
get your guys' contact information after this, and yeah, so we can kind of like, if it's okay with you guys, so we can share it with like our students if they want to like reach out or ask questions afterwards.
Sure, absolutely.
Yeah, that's great. So I mean, you know, we'll open it up. We've got 2 minutes left. We'll open it up for like general Q&A. So if you guys have questions, just kind of like raise your hand and we'll call on you. And if questions in the chat, just type it in there and we'll kind of like go through it.
Well, as someone who like recently started like trading crypto and I'm trying to like learn more about it, I was wondering how you guys, when you're researching smaller cryptos with smaller market caps like Shiba Inu or Cardano, which are way smaller than Bitcoin, like how you can really kind of predict like if they're gonna explode kind of, or if they're just gonna bottom out and be like the next like just smaller crypto.
I don't think anybody can predict that. I think you can kind of go with your gut. Usually things that are going up keep going up, and usually things that are going down keep going down, and that's kind of as much as I've garnered. Beyond that, you can look at like structural like market inefficiencies, and there's quite a few of those. Like I remember I was like, Alex texted me when the like ETF announcement came out, and I just like actually had time to like open up a position on like my phone on Bitcoin and like buy more before the price came up and then like sell all in those like it's stuff you shouldn't be able to do as like a retail participant, because you have like just like access to information that has already hit the market. It's very bizarre. It's like outsider information doesn't always get priced in on like any sort of like reasonable timescale here. So like I don't know. There's a lot of stuff. Like I think like news, market inefficiencies, and momentum are pretty much it.
Yeah, looking at project teams that like, and knowing those teams too, and to Kareem's point, I mean, this is still kind of a crapshoot. Now, I said this before, there's tons of teams that have great technology and stuff. And, you can't follow them all, but, I think someone who can really get down and dirty, a lot of these new projects are talking about their stuff on Discord, right, or whatever else, like that's a huge advantage in terms of spotting a new project, is really being, in those chats, understanding, and assessing the level of interest from both the, seeing if the community and early community is building on those. I mean, that's basically how you do it. It's extremely hard. There's a bajillion of them, so it's almost impossible to actually hit. I mean, most of the folks that make money on really low cap coins are just like, holding bags for a ton of stuff. And, one of them hits, there's still a complete, like, it's absolutely sort of a speculative casino out there for really low cap stuff. But I mean, to the extent that you can know the team, see the community in action on the ground, so to speak, like that's, I think, where you're going to find alpha if it exists.
Yeah, quick question I had on sort of the more venture side of things. I was wondering if you could provide some clarity on how those deals are sort of structured. Like, do you guys get specific governance tokens for startup protocols? Do you guys buy the token outright? Is it an entirely different structure? Just interested on how sort of that whole segment works.
We do anything and everything. I think like it varies deal for deal, but like, and this isn't even specific to Galaxy. This is just like in this space. Usually, like if you are buying equity, you will also tend to get an allocation of the token if the project launches one. And if you don't, you've kind of been shortchanged, because like that's where most of the value tends to accrue, isn't to the equity of the company, but actually to like the token that they launch, if there is a token. Like, yeah, that's, I hope that's helpful. There's a lot, there's a lot of like, it's very bespoke still. There's a lot of like other considerations and it's far from standardized, but that's just generally what I've seen.
How do you guys vet your founders? Like, have you guys ever dealt with anonymous founders? And obviously there's a lot of like, or one of the big selling points of crypto is you can have like a 13-year-old in Thailand basically developing a DAO that ends up, accumulating a couple billion in assets. How do you guys sort of look at founders and CEOs in a sense in this sort of space? What's the vetting process you use to sort of,
So pseudonymity and anonymity usually do not apply to people who are giving you a lot of money. Like usually it's like they keep a pseudonym with the community, but like all their investors know who they are, and it's generally like they trust us and we trust them, and we need to be able to establish that trust in order to give them, a lot of money. So we vet them by talking to them usually, and having the real name is generally a prerequisite.
Here we go. Thank you guys for coming out. I just want to ask a quick question regarding to kind of Bitcoin market dominance, and then the 4-year kind of market cycles that is kind of harped a lot in the media and stuff like that. So with kind of the rise in utility, do you guys think we'll still see the 4-year market cycle, or are we kind of going away from that and just going to enter a multi-year bull market because of new utilities coming into the space?
It's a super interesting question. I mean, let me jump in for a sec, Kareem. I mean, you can't deny the sort of Bitcoin having induced, scarcity schedule. But, I think as we've seen more institutional money come in, you'll see volatility continue to go down overall. I don't know if that means we won't see, these sort of constant bull and bear cycles. I think they'll be dampened over time, but more as a function of just increased liquidity in the space. And we have seen volatility both in Bitcoin and ETH come down over time. I think it'll continue to, but I'm not going to bet against the halvings causing these sort of cyclical events because that's all we've sort of known in this market.
Yeah, I like volatility. I'm gonna be sad when things get less volatile, but they definitely are. Like it's like would have been unheard of in 2017 to see like Bitcoin like ranging near its all-time high for like weeks at a time. So it's still a 90 vol asset. It still does like 5% plus or minus in a day, but it's things are quieter now, and I think they're gonna keep getting quieter as the buyers become more and more long-term capital allocators than retail degenerates. So
Maybe go ahead and ask a question. Manny, go ahead and ask your question.
Can you hear me okay? Okay, sure. So thanks to the handshaking process in the multi-chain world, we now could gain more peer-to-peer experiences, like besides the ability to control who connects, read and write, or like cut out the transaction fees. What are some of the other possible fascinating experiences that multi-chain could bring? And I'm curious about some of the key takeaways from the research for the multi-chain demand in the near future.
Yeah, I mean, look, like there's a lot of capital flowing into non-Bitcoin, non-ETH assets. We have a report coming out on this, like hopefully this week.
Hopefully this week.
Yeah, I think generally, like to Alex's point, like we start from a place of relative skepticism. It's like we want to take all of this stuff seriously, but like it is 99% plus nonsense in this industry. And so like, yeah, we do like, I think there's a lot of action on on alternative L1s. I think it's looking like actually a pretty viable way to scale is just by like having other chains and like you said, like using handshakes or like bridges across them. And so it's definitely something that like we are watching out for, but to a large extent, a lot of the capital allocation has been because like these chains and their ecosystems and like the projects on top of them are running like incentivization programs. So it's really that like people are getting paid to use them. I'm not going to name names, but there's like some tokens in particular, like where it's just like liquidity on, capital flows in, liquidity off, like capital completely dries up and you see it like run back to ETH. So people still like value having access to like the ETH ecosystem, and that's still, I think, used of more like ETH as an asset is thought of more as like, a real hard asset than most other like alternative L1s. But we'll see where it goes. And right now, like Ethereum fees are really freaking high, and like that looks pretty unlikely to change for, call it 6 months a year at least. So it'll be an interesting one to watch, I think. But I personally end up being pretty bearish on most of this stuff.
And then do last question.
Awesome, thanks. So I guess my question has to do with government regulation and the fact that I'm sure the government will want to have some sort of regulatory say in the space. But I guess so long as there's a gateway between fiat and crypto, the government will be able to have some sort of visibility and say in the network. But I guess how do they react if and when it becomes increasingly easy to transact only over crypto without moving into fiat as adoption grows over time?
I don't think so. I don't think we're gonna move to a Bitcoin standard tomorrow. I do think, like you said, it's kind of becoming easier to leave your assets in this stuff. basically everything I own is in Bitcoin right now. So that's I might be biased on this one, but it's still kind of a pain to transition, and there's still a lot of stuff that I need fiat for. My landlord doesn't take Bitcoin, unfortunately. He does take Venmo. Yeah, I mean, look, like the space is going to get more regulated. Regulation is gonna, it's like you hit the nail on the head. Like they're going to continue to kind of use the fiat like on and off ramps as choke points. At the end of the day, like decentralization is the kind of the best defense here. It's like if something is actually decentralized, ends up being quite hard to regulate just by its very nature. And they end up, if they want to actually take like serious action, they end up having to resort to pretty extreme tactics. So anyway, long decentralization on this one.
Awesome. Well, thank you, Alex. You have last words.
No, I'll just say like it's a exciting space. Obviously, I think we're very confident in its long-term viability. So I know where there's a lot of career risk like before. I think there's a lot less now. There's an absolute flood of people moving from the traditional and finance and tech worlds moving into this space. So you're not alone in looking at it, and you should keep looking at it. There's a long way to go though too, so you're not late.
Yeah, exactly. Short banks, long crypto. Well, thanks to Galaxy Digital, everybody from Alex, Livia, and Kareem for joining us. Before we leave, we actually we have another event this Thursday with Coinmetrics. Kareem, I think it's your old company, your alma mater. So they'll be coming.
Yeah, Tim is my old boss.
Yeah. So it'll be awesome. They kind of do data analytics and data science in the space. So be sure to join that event as well. So yeah, thank you guys so much for coming out, and thank you guys, Galaxy Digital, for taking the time to